Hey everybody, welcome to Mortgage Today, and oh what a day it was. Happy Friday. UMBS were up 16 basis points on the open this morning. Stock futures were flat. We got PPI today, producer price index. So core PPI month over month came in at 0.4 and a 0.2 at forecast. Last month was revised to 0.3 from flat. So that's a pretty big miss. Core annual PPI was 3 on a 2.5 forecast. It was 2.3 previously. The jump was almost exclusively related to the final demand of trade services, which captures retailer margins. Thankfully, PPI is not the same league as CPI. If it were, bonds would be tanking a lot harder as it stands. We're only seeing a small shift from the modest overnight gains to the modest AM losses. After yesterday's CPI release, investors have priced in a 90% probability of a rate cut in September. However, this morning's PPI data could put a damper on that metric. The PPI is a measure of prices that producers can get for goods and services. The PPI, like I said, introduced a brief but unconcerning threat to this week's relative level of triumph, courtesy of yesterday's CPI, by suggesting a big unexpected surge in core inflation at the wholesale level. Bonds initially panicked but quickly got back on track and never looked back. Thankfully, the components behind the PPI surge are not the same components that would translate to PCE inflation in 2 weeks. We can also consider PPI's notorious volatility and conclude it could take more than one of these surprises to raise a serious eyebrow. With that, the focus of the week remains squarely on yesterday's big CPI victory. So UMBS ended the day up 20 basis points at 100.13. So when we look at the technicals, 100.13 puts us up here into this really nice range. It is helping us get some improvement. So hopefully we can get some more bad news to get us back up and get us over that. So UMBS ended the day up 20 basis points at 101.13. So at 101.13, it puts us up in this brand new range right above that top Fibonacci line, which is where we want to be. So hopefully we can stay in that area and keep moving up. We also got news that the top mortgage lender in the United States, United Wholesale Mortgage, is upping incentives it offers to its brokers on FHA and VA loans, offering an additional 1.25 in compensation. So that'll be a big win for the brokers. However, it's a big loser for the MBSs backed by Ginnie Mae, because that's going to make them pay off a whole bunch more. But then again, United Wholesale has never had a good relationship for caring about other people's problems, so we'll see how this works out. Looking at next week, we have a lot of Fed speech, so I guess the Fed people want to get paid. So Monday, Chairman Powell is speaking, so is daily. Tuesday, we get retail sales and another Fed speaker. Wednesday, we got a couple more Fed speakers and a 20-year bond auction. On Thursday, of course, we get jobless claims and a couple more Fed speakers. And then on Friday, a couple more of them get paid. So a lot of talking next week, probably saying data dependent. But if you have some time over the weekend, check out some of our core influences as well as our sponsor at wellthatmakesense.com.